You're listening to the Wise Women Invest podcast, a division of Noise Media Network, hosted by Audrey Bell Kearney. Wise Women Invest is on a mission to help 1 million women learn how to make smart money moves by becoming savvy investors in real estate, the stock market, cryptocurrency, and early-stage businesses. Now your host, chief noisemaker, and wise woman herself, Audrey Bell Kearney.
Hey, welcome to another edition of Wise Women Invest. Good afternoon, good evening, Carolyn.
Good evening, how are you?
Whew, I'm tired, but it's okay. I won't complain at all. How about yourself?
Have a great day. I'm not going to complain either. I've had a great day, great holiday, so I'm not going to complain.
I know. It's so funny. I was listening to the intro, right? Now I've heard that intro a million times. I actually wrote the intro. And earlier today, I was looking at like the goals for 2022.
Right.
And so, the goal is to help 1 million women learn how to invest and set up investment portfolios over the next 5 years. So that's the goal I had set, right? And it was just weird because even though I set that goal earlier this year, for some reason, it popped up in my head like about an hour ago. And I was like, and then I just heard this, like, wow, it feels kind of weird, but it's a good thing. So much of a good thing till I'm working on the app and I'm excited about the app. So the Wise Women Invest will have its own app before the new year. So I'm happy about that.
Awesome.
Yeah. I'm over here, trying to make real money moves, but I want to make sure that we can reach women all around the world. And I know the way to do that is, a lot of people spend time on their mobile apps. And so I wanted to be able to have the app where they can learn. I wanted to be able to have mastermind sessions where we can talk about money for them, for people who just can't jump on a Wednesday night, but they want to come on weekly and say, you know what, I got a money question. Exactly. I got a money question and I need answers. And so, the goal is to have a weekly session where they can ask questions and help them set up portfolios and investment accounts and insurance, all the things that's going to make them have a balanced portfolio and also help them set them on the path to creating wealth for themselves. So I'm excited about that. So the Wise Women Invest app should be ready very soon. And I know what I'm supposed to be doing, Carolyn. I know. But the other side to me is, I have all these things that I want to do. And so one of the apps, but it's almost finished. So as soon as it's finished, I get on my other job that I'm supposed to be on. So,
the great thing is when we talk about Wise Women Invest, it's investing in every aspect of your life. So not just it's putting your financial house in order, but it's also there are certain gifts, abilities, skills, desires that all of us have within us. Some of them are God-given. Some of them are ones that have been created in us since we were born. And so many women they wear a lot of hats. There are a lot of things that they want to do, that they are doing, that they're investing in themselves. So when I think about this broadcast that we do, I think about women investing in all areas of their life. And yes, we're going to help them with their portfolios and learn about the market and learning about all of the other things that you talk about in that commercial. But it's also about them getting their own personal life to where they're investing in themselves, investing in their present, and investing in their future as well.
Yeah, and I think that's so important because I think about when you first start out doing anything, you have to have a mindset if you want to succeed, the mindset to do that. And I know for a lot of people, just getting to that point where their mindset is saying, you know what, I want to do this, whatever it is. It could be investing, it could start a business. You may want to, run track. You may want to be a ball player. It all starts with a mindset. And so that's going to be so important. And I know when we do the money masterminds, I know a lot of what we're going to be doing is coaching women on how to, really change your money mindset. I remember going to an event T. Harv Eker had. It was called The Millionaire. What was it called? It was called he wrote a book called The Millionaire. Oh God, what was that book?
Is that Millionaire Mind?
I think it was The Millionaire Mindset or The Millionaire Mind. But my husband and I went to his event he had years ago. And I remember everything was about mindset. And it was like a very long event. It was here in Atlanta. But at that time, I was still living in Jersey. But we flew to Atlanta for that event. It was like a 4-day event, 12 hours a day. Wow. Just conditioning your mind. And to the point where he gave us a rubber band And he said, whenever you have a limiting money belief, you click the rubber band to snap yourself out of there. So everybody was walking around like for 4 days, popping themselves every time they had a thought that I don't have enough money. You had to pop yourself with the rubber band. So it was crazy, but that was the conditioning to change your mindset. And I haven't heard from T. Harv Eker in a long time, but I remember, going to that event and spending 4 days, like 12 hours a day. I think we started at 9:00 at night. We didn't finish till 9:00 in the morning. We didn't finish till 9:00 like that night. And that went on for like 4 days.
Wow. And I'm sure that you still remember a lot of the concepts that you heard there. And some of those things are really what help us to move forward in looking at different ways to earn income and increasing our wealth and investing in all of that. And he's a master. He's one of the ones that's well known for that change in the mindset about money and all of that. So yeah, great coach.
Yeah. So we're going to be talking about bonds today. I know a lot of people don't understand bonds. The first time I was ever introduced to a bond actually was through my husband. So his mom had passed away. And when she passed away, when people pass away, you go through their things, you find all this stuff. And so they found a whole box of bonds that she had started for like his daughter, his nieces and nephews. So it was this box just full of bonds. And so that was my first time even understanding what a bond, well, not even understanding, seeing a bond. And I was like, well, what is that? He's like, my mom used to buy this every payday for the kids. And so she would buy a bond and she put them in a shoebox. And when she passed away, all of her grandkids had like all these bonds that she had collected over the years. So for those of us who really don't understand bonds and how they work, let's jump into that. What is a bond and how do they work?
Okay, great. I'm glad you asked. And you just conjured up an image of bonds have been around for centuries, right? Long times. And back in the day, they used to buy bonds as a way of investing. That was the way they invest. A lot of people invested, and they actually had a paper bond. Like you said, you found it when mom was gone. So people actually had the paper. More of that is done electronically now, but people did have bonds. They bought savings bonds. That was the thing that they did. And the interesting thing is that it is a very, very simple investment. Think about it, and I'll explain it really simply. Think about it as a way to earn money. For example, not earn money, but to borrow money. For example, if you wanted to buy, let's say you wanted to buy a car and you didn't have enough money, you could borrow it from a friend. And so that if the friend had it, you would borrow it. And you could say, okay, if you let me borrow this, I'm going to pay you back what you lent me plus interest. That's really what a bond is. It's you actually, a company or a municipality, someone who needs to raise money, you would then pay. They raise money by selling bonds, and it's a way to loan money. And then you loan it to them, you're the person who loans it, and they pay you back the amount that you loan them plus interest. And that's really the simplest way to explain them. Companies do it when they want to raise money. The government does it when it wants to raise money. So there are different types of bonds. We'll talk about that in a second, but it's really a way for organizations to raise money. That is the simplest definition of a bond. It's a way to raise money.
As I studied for my securities license, I went through my SIE training. And the trainers, they had these huge bonds that they showed on the screen. And you know what's crazy about them is they look like giant pieces of money. Like it's like a big sheet and it looks like money and it's crazy. But you're saying that today they don't really use the paper because everything is digitally, controlled. Now for people who have, and I could tell you another thing, my uncle passed away. And now this was crazy, Carla. My uncle passed away and he passed away in 2009. He had bonds up under the rug in his living room.
Wow.
They had been there forever. They were in some plastic. They had been there forever. His wife had bought them for her daughter. And so there was nothing we can do with them. So we had to find the daughter and give her the bonds. So that's the crazy part. So we were like, so why were the we got people watching. Hi Marcello from Atlanta. Hi, Palona. Hi, everybody. Thanks for joining Carolyn and I as we talk about investing tonight. But we found the bonds up under the rug in the living room, and he had been in that house for probably 20 years, Carolyn. So I can't even imagine how long those bonds had been there. So what happens to people who have bonds like right now? If they bought saving bonds years ago and everything is pretty much digital right now, are the bonds still any good? And if they are, okay.
Yeah, they would take them to a financial institution, and they would, because the bond is only as good as the face amount. So whatever the face amount of the bond, because most people, when they bought bonds, they bought them at a discount. And they hold them. That's how you make money with the bond. You make money two ways, basically. One, you buy it at a discount, and then you hold it for the period of time that they tell you, and then you get that face amount back. Some bonds pay interest, and that's usually given on a every 6 months. You get interest on it. And then there are ones who you can sell. If you sell the bond for more than it's worth, then that's a profit that you make as well. So you either hold it until it matures, and then when it matures, you can actually go cash them in and get that money for them, or you can sell it and make more profit on, because you'll sell it for more than the face amount.
It almost sounds like a CD somewhat. So when I think, like, I hear you talking, and I've had CDs before, it sounds like a CD. So what's the difference between the bond and the CD? Because it sounds almost the same.
Well, it's a little bit, it's similar. It's similar to the degree that it's a set interest rate mostly on bonds, and that's where the similarity is. But most bonds you have to, well, with CDs, if you cash them out before they mature, then you're going to have to pay penalties on that. With bonds, you typically want to hold them until they mature. So there's really because if you sell a bond before it has matured, you're going to lose money. And the other difference too is other than a CD is not considered a debt instrument. It's not considered, you're not lending money. So let me give an example of some types of bonds, and that may make it a little bit easier to understand. For example, there could be what we call a municipal bond. And a municipal bond, like a municipality, could be a city, a state, a government. And that's when, let's say the city, state, or the government, let's say Gwinnett County decided that they wanted to build some more bridges. They wanted to fix the highways. They wanted to build a hospital, another hospital. Well, they would issue bonds in order to raise money to do that. And that's where municipal bonds come in. So if you say, I want to invest in municipal bonds, then you find a project or a city or a state that has issued those bonds, and then you buy that. You buy those type of bonds. The other types, and that's a municipality, when they do everything that you see they doing in a county, whether it's parks, gardens, any of that kind of hospitals, that's what they're used to raise the money for. And they're usually for a specific period of time. Another type of bond is a government bond. We call them treasury bonds or government bonds. And that's when the government wants to raise money. And let me just say that is generally considered one of the safest investments you can do, because it's pretty unlikely that the government is going to default on money that they borrowed from you. You follow? And so the interest rate typically on most bonds are not as great as if you invested in the stock market, because remember, you're in a fixed environment. And that's one of the ways it's similar to a CD, because it is a set or fixed interest rate. The other type of bond could be a corporate bond. And again, corporations, sometimes if a corporation wants to they want to do some research, they want to hire some employees, or they want to just change some of the dynamic of the company. They want to look at some different projects, research and development. Corporations may issue bonds as well. And then they, of course, with bonds, they promise they're going to pay you back the amount of money that you buy, and then, of course, any interest rate that's on that. And so that's municipal bonds, corporate bonds, the government bonds with the treasury bonds. Those are the three main types. And it's all of them. And most companies, I'll say this, most corporations and people who want to raise money by selling bonds, they can get more money that way, because they can get far more money than they would make if they tried to go to a bank to borrow it. And that's one of the reasons why they decide to issue bonds, so they can raise money that way.
So now, okay, so if I'm a business owner and I'm a small business owner and I want to raise money for my company, how do I know how to set up a bond for the company so I can say to investors, hey, listen, I got these bonds, I need to sell some so I can raise some money. How does that work? That sounds amazing, but
well, it's a laborious process. We probably don't have time to talk about it today.
Okay.
It's a laborious process. You do have to get all of these credentials through the FINRA and through because it is a federal process. You can't just say I'm going to issue bonds. You have to go through all kinds of certifications. You've got to make sure that whatever monies that you're going to be able to pay the company, the people back who actually buy the bonds. And because of it's very regulated, because you don't want to have a company that will default on the money that they have raised by people buying the bonds from them. You follow? So there's quite a bit of detail that you have to go through as a small business owner. And if there's anybody who's interested in that, we can talk to them at a separate time if they make contact with you. But it does require you to go through quite a bit of federal regulated things in order for you to be able to issue a bond and raise money for your company. And also it's that they're really, the amounts of money are higher than most people would really think, in terms of what you're anticipating you're going to raise from them.
Yeah, I can see that being a little bit risky as a small business owner, talking about issuing bonds, because businesses, especially startups, it's a little bit volatile. So you want to issue a bond and you don't know if you're going to make it. So I can see that being a little bit of an issue. So I can see why that's heavily regulated because of that fact. Now, we talked about stocks, we talked about mutual funds. Are bonds risky? Because we know some stock investments, depending on your level of risk, are they risky?
Yeah. Well, here's the story. One of the best reasons to invest in bonds is because a couple of reasons. One is safety. It is considered one of the safest investments a person can make, simply because when you buy a bond, you are pretty much guaranteed to at least get back your money. You follow? Some of them do have interest, but it's a relative safe investment. And for people who really don't have the money to invest in stock, or they're like, you know what, I'm really, I don't like the way this market is going up and down so much. I need something safe. And for people who really don't like the volatility, Audrey, as you said before, they don't like that volatility, they will invest in bonds. I'll give an example. I have a client who has a portfolio of $500,000. Last year, at the start of the pandemic, he calls and he says, Carolyn, take me out of the market and find me some bond funds. So I knew that he knew that the bonds he was just scared. Now, the market actually did great during the pandemic, but he didn't want to even deal with that. He said, I know the bonds are a safer investment. I know that the likelihood of me losing my money, I know I'm going to get a lower rate of return, because the lower the risk, the lower the reward. Okay, so there's not a lot of risk there, so you don't really get that much return. I think average somewhere between 1% and 5% is typically what you're going to find in a bond, and you have to hold them for specific periods of time. And we'll talk about that in a second. But one of the best benefits is the fact that it is considered one of the safest investments out there. The other benefit from investing in a bond is you can get income. You can say, I want to know for sure how much money I'm going to get every single year. Well, when you invest in a bond, the interest and everything is established right up front. And so you know that you're going to get that fixed rate of return. As I said earlier, it's usually paid twice a year. You know exactly what that money is going to be based on the bonds that you got. The other benefit is there's some people who call themselves civic investors. So bonds give you an opportunity to be a part of the community. As I stated earlier, you have, let's say you're in Gwinnett County and they're getting ready to build a bridge and they're getting ready to build some schools. And if you participate and buy those bonds, then you're part of that community. You're part of that community raising money to help make that community better. Some people buy bonds just for that, and they're proud of it. I have some clients, some older clients, they are so proud of the fact that they're investing in some municipal bonds because they know this hospital, I helped build that hospital because I bought bonds when it was there. And then lastly, one of the other benefits is diversification. As my client I've told you about earlier with the $500,000 portfolio, he wanted to switch all of his money to just bond funds. He said, just find some bonds for me, some bond funds. I have another client who called me about a month ago. She said, Carolyn, I want to further diversify my portfolio. Right now, I'm investing aggressively. She's got some aggressive mutual funds in there. She's got some over-the-counter stock. She's got a little bit of crypto. And she said, I want to further diversify. So I want you to find me a couple of bond funds, some corporate bonds, some municipal bonds. And that way I can manage my risk a little bit better. So some people do it for that, so they can have greater diversification. So you got safety, you've got income, you've got community, and you've got diversification. Those are key reasons why people say, you know what, I'm going to invest in bonds. And especially those people who get squeamish about the stock market. If you're really squeamish, I would say invest in something that's a little bit safer, which would be a bond fund. And if you don't have the connections with a broker to buy the bonds from them, then you can also, if you don't want to buy them directly from the municipality, you can actually invest in a mutual fund. Because we talked about mutual funds a couple of weeks ago. You can actually invest in a mutual fund that's only investing in bonds. Municipalities, Georgia, Chicago. Like if you wanted to invest in everything that was happening in Georgia, you can actually invest in a mutual fund that's building bridges and building roads and building schools in the state of Georgia. Isn't that awesome?
That's awesome. Let me ask you a question, because as you were talking, I was thinking about this. So when I used to live in Jersey, I worked at a hospital called United Hospital in Newark, New Jersey. And United Hospital built a MRI lab across the street from the hospital. So they took one of the parking lots and they built a MRI lab. Then they built a huge parking lot in the back of the hospital because they was anticipating like all this traffic from the MRI center and things like that. So they built a parking lot in the back, Carolyn, and everybody was so excited about the growth. Well, the hospital went bankrupt like in probably 2 years after that. And so I'm thinking about people who said, you know what, I want to do my civic duty. I want to be a part of the expansion. And they wind up bankrupting. So I lost my job along with hundreds and hundreds of other people. We lost our jobs. So what happens when you have a bond to something that goes belly up? Because that seems like a safe investment because it's a hospital. And I think about that because right now, Northside Gwinnett Hospital is about to build a 10-story new building to open up 192 more beds. And so, I'm thinking, well, okay, I want to be a part of that. But then I'm thinking, wait a minute, what happens if it goes belly up? What happens to my bonds? Do I lose them?
Well, no, that's the other thing about it. They're guaranteed. And that's one of the reasons why we were talking earlier about a person who doesn't understand or is regulated, because you have to have, it's very rare that they go into default because you have to promise that you're going to pay. And that comes before anybody, you've got to pay those people because that's a part of the agreement that's there. So it's very rare, and that's why it's considered safer, Audrey, because it is rare that they do default. It's rare. Most of the time, before they liquidate everything, they'll make sure that those investors have been paid. And so, but yeah, it could happen, but it's rare. It's rare that they happen. And the federal government bonds, again, as I said earlier, are considered the safest of all because it comes with the full backing of the federal government as well.
And we all know that the federal government can print money when it wants to. Hence the $1.9 trillion bill they're about to pass, Build Back Better. So
exactly.
and I think I look at all that stuff and I'm thinking, woo, so we are going to be in debt forever. Yeah, we are. So,
yeah, in debt forever. And they're going to be issuing more bonds because they're going to raise money. And bonds were a really big deal back during the war. I don't know if you remember that in your history, but they sold bonds for war back in the day as well, because that was their way of being able to raise money for the country. I tell a lot of people, one of the questions that a lot of ladies ask me is, are bonds a good investment? And I said, well, yeah, it's a good investment, especially if you're adverse, as you stated earlier. If you know you have an aversion to the market and you really, really cannot bear the thought of losing any money, then bonds are a better investment for you because you don't have to deal with that kind of risk. If you really don't like market volatility, if you have a lot of stocks and you don't have any bonds in your portfolio, that's a great way to diversify your portfolio. And we talk to ladies all the time about being diversified. It's like not having all of your eggs in one basket. You follow? So you don't have to worry about, well, what happens if this loses money? What happens if this loses money? If you are diversified, then you really can manage your risk a whole lot better. And then lastly, a lot of people, when they get ready to retire, when they get to, like I had a client, I'll say Mr. Jones. Mr. Jones called me a couple of days ago and he's turning 70. He's turning 70. Great guy. He's turning 70 and has not started taking any of the monies from his retirement account. He has not started. He said, you know what, Carolyn, I'm turning 70 and a half, and some of the retirement that he has requires that he starts his distributions at 70 and a half. And he said, what am I going to do now? I need to get out of the market for real. And he literally didn't care about the fluctuations. But as you near retirement, you may want to say, I want to shift away from the market and start looking at bonds and other ways. And most people don't dump them immediately. They just start just moving the money just a little bit so they don't have everything in the market, because the market has more downturns than investing in bonds. But let me also say that you will always make more money when you invest in the stock market. Mm-hmm. You will make, so bonds are safer, lower rate of return. So low risk, low reward, higher risk, higher reward.
I'm excited about something you said. You said that this gentleman is at an age right now where he is required to take that retirement out unless he's going to lose half of it. Is that correct?
No, I just say he's 70 and a half. He's not going to lose it. He's just at an age where he needs to start taking it out of there.
But if he doesn't take it, doesn't he lose part of it or something like that? Is he penalized or something?
He will get penalized if he doesn't start taking it out. But once he doesn't have to take all of it. He can just start. It's called a required minimum distribution, and you're required to start taking that money at some point as you start retiring. And he's at that point now. He's like, well, I'll just have my. And it's a great way you can do that. He said, I'll just have my mortgage. He still has a mortgage. Because he took money out of his house to help his kids. But he's going to have his, in retirement, pay his mortgage every month.
Wow.
So a great way to do that. He said, let me just pull everything that I need and I'll have it. I'll look at all the stuff that I have and I'll have my mortgage paid every month from my investment. And that's going to be his required minimum distribution. So yeah, but again, because he's gotten older, he really wants to start moving some of it out, number one. But number two, he wanted to start moving it into bonds or something that was a little less volatile than the market. Because, I think the older people get sometimes. That's why it's so important that ladies and gentlemen too, but ladies, that we start investing as early as we know about it and understand it, start putting our money someplace is going to grow better for us, because your money is always going to make more money than you do because it works 24/7. So it's always great to start investing. And then as you get older, diversify. And as you get older, you can move it to safer places so you don't have to worry about the volatility.
I'm excited. I'm excited about one of the things I know we're going to be focusing on is helping women who have probably got to that 50-year-old mark, and they said, you know what, I don't have an investment portfolio. And a lot of them think that they have run out of time, really, right? But if you're taking care of yourself, you can live a very long time. And so I know that there are a group of women out there who feel like I've run out of time. Is it too late for me to start investing? So I know that we're going to be doing a lot of training around that. I want to go back though for a second. My brother and I used to have this conversation all the time. So my brother would always visualize him like finding this bag of money or winning the lottery or something crazy like that. And I would say to him, if you win that type of money, you have to talk to a financial advisor. And he was like, I don't need to talk to a financial advisor. I know how to handle my money. I said, not that kind of money. You don't know how to handle that kind of money. So this is a conversation we would have all the time. And so something happened recently. He goes, what would we do with all that money? I said, we have to get a financial advisor to tell us what to do with that money. So it was a lot of money. It was something like $180 million. It was some kind of lottery thing. But I heard somebody say, people with that type of money, they put a lot of that money in triple E or double E bonds or something like that because it's so much money. And I was like, really? I had never heard of that. And I heard them say Oprah does that. And I was like, oh, so in my mind, I'm thinking, well, heck, if Oprah's putting her money in double E bonds or triple E bonds, that's what I'm putting mine. Well, I'm gonna put mine in without the help of a financial advisor. So I think bonds, they can help you, but I think for people who have a lot of money, sometimes they just want to put it all in the bank, Carolyn. And I know my brother was one of those people. He's just going to put it all in the bank. I'm like, can't put all that money in the bank. It's not FDIC security. You can't do that. So don't do that. But for the people who are listening, if they need to know more about, investing in bonds and how to pick a bond, like how to pick a municipal bond over a treasury bond, over a bond fund, where do they start?
Well, they can start by calling us, Audrey. We can teach them how to do that. The bonds, and I'll tell you this too, a lot of people buy bonds because depending on the bond, in some cases, there's tax-free. You can get some are federal tax-free, some are state tax-free. So a lot of them do it for the tax benefits as well. The government bonds you can buy directly from the government. For people who don't want to buy specific bonds, you can also, as I said earlier, you can buy a mutual fund that's investing in bonds. You would just have a financial advisor has to help a person buy a bond if it's not a government bond, okay? If you want to do a corporate bond, a municipal bond, any of that, you must do it through a financial advisor. But you can go directly to, and when I say advisor, it could be a person like myself, like Audrey, or it could be, you could find one online, just like they're doing with crypto and anything else. You can find one that way as well. But it's better to go through a broker who knows what they're doing. But with the government, you can buy those directly from the government itself. The type of bond would depend on basically on the person, whether or not they're interested in a corporate, helping a corporation raise money, or whether they're interested in helping a municipality build bridges, hospitals. You can invest in a particular state, as I stated earlier, but it's doing the research. And for those people who don't want to do the research, we can help them out there as well. Wise Women Invest is here to help women get started investing, get started to build your portfolio, get started putting your financial house in order. And there's no age that I would say, unless you're like 70 years old and you haven't saved a dime, I would say, and you're not working anymore, I would say, you may want to just stick to Social Security. But if you're 18 to 70, you have time. You need to start whenever you start. You need to start whenever you're ready to start. And sometimes when you're not ready to start, you need to start, because the money, as I said earlier, your money is always going to make more money than you do because your money is working 24/7. So you start to invest and treat it like you owe yourself. That you owe yourself the time to put money away to invest. And as women, we are a little bit behind the 8 ball. Men still historically invest more than women. And that's one of the reasons why I'm so glad that Audrey has this outlet so that women can hear that here's your opportunity to start investing, to start raising money, to start saving money for yourself, and treat it like a bill. Figure out how much money you want to put away and treat it like a bill that you pay yourself every single month.
Nobody loves a nice shoe more than I do. Nobody loves a nice shoe more than me. However, y'all, a nice shoe cannot get you passive income. Let me just say that one more time. A nice shoe cannot get you passive income. And Lord knows I love a nice shoe, especially a boot. But on my journey to create generational wealth, I can't leave the shoe to anybody. You know what I'm saying, Carol? I can't leave the shoe. So I have to make really good financial choices if I want to make sure that the next generation following me has something to hold on to and to take it to the next level. I can't leave the shoe. I don't care how many Jimmy shoes you have. I don't care how many Marc Jacobs you have. At some point, the shoe is going to break down. I know some people would beg to differ, but it's going to break down at some point. So think about where you want to put your money. Now, you may want to invest in Marc Jacobs' company. You may want to buy some stocks if they have stocks. You may want to invest in Jimmy Shoe on the business side, not the shoe. Okay. My daughter was telling me about a purse. So I'm not a purse person. I'm not
I'm not either.
It's called the Everything purse or something. Everything. It's some purse by, I don't know if it's by Fendi or Gucci. It's by some company, right? So she's telling me about this purse, the Anything purse, the Forever purse. I said to her, so the purse is like $1,500. Now I know that's still cheap for some people. Like, cause I know people spend like $4,000 or $5,000 on a bag. But I said to her, well, why do you want the bag? She said, well, it's a Forever purse, and I guess everybody has them. And I was like, I would not spend that kind of money on a purse. Not do it. And she's like, I gotta get one because whatever she was saying. Take that $1,500 and put it in an investment. Let them go to bed, put the money in investment, go to bed, let the money work for you. And then put that money in another purse because you had the money. Oh my God. So we're gonna be, listen, y'all gonna get tired of me and Carolyn, but you won't get tired if you're really serious about building generational wealth. We're gonna educate you as best we can here on this show. The app will be ready soon, so you'll be able to download the Wise Women Invest app. I'm excited about that. We're going to have our money masterminds. They're going to be free. All you got to do is come in. Well, not the mastermind. We got to think about that because we want serious investors. We don't want you playing games because you don't have a lot of time. A lot of people got stuck when the pandemic hit last year because they didn't have portfolios to fall back on. And they lost a lot and they lost their way. I know there are companies right now, Carolyn, raising money for food for the holidays, toys for the holidays. And just think if you had money working for you in the pandemic. You said the stock market did really well during the pandemic.
Very well.
So had you had stocks, now I got to tell you, and I've said this plenty of times, we are heavily invested in crypto. And I know it's not, don't listen to that because you got to be really, 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 really okay with investing in crypto. Crypto is extra. When I tell you volatile, I don't even look at it because I would probably throw up because it's super duper volatile. So I don't even look at it. But like Carolyn say, you have those accounts automatically, the money coming out automatically, you don't miss it. And it goes into the investment. I don't watch it. My husband watches like a hawk. I can't watch it because I was like, I can't. I already know it's hard for me to say, well, what does it do? I'm still trying to figure that out. I do know though, sometimes when I do look, I'm like, ooh, that's nice. I don't look after that because I don't want to be sick. So we're just telling you to, set aside some money. I don't care if it's $25 a month. You can invest that. You can put that away. I know for me, I love crabs, Carolyn. I know that. I love crabs. I spend about almost $200 a month eating crabs. No lie. I eat crabs at least 2 or 3 times a week. I love crabs. If I didn't have money to invest, I would have to give up a week of crabs. But see, I like to live up. I like to make the money so I can live my lifestyle. I don't want to give up my crabs. What am I going to eat?
Exactly. And that's really it. It's the lifestyle that you can have when you make the choices, the smart choices. And that's what this is all about, is wise women investing in themselves, making the choices so that you can live the life that you want to live.
All right. Well, listen, guys, that's all we got for this evening. We're going to go get us some dinner. I got crab. My husband just brought them. I literally had them. So I'm going to go eat some crabs. We'll be back again next week. And Carolyn, I think next week I want to talk about index, fixed index and index accounts, because I feel like I hear a lot of people who are very like, I don't want to invest. It's very volatile. And I feel like we have something to offer them and show them another way to go where they don't have to take so much risk. So we'll be talking about index and fixed index next week. So be sure to join us. Tune in at 7 p.m. next week. This show is streaming live on LinkedIn, Facebook, YouTube, Twitter. Oh, Twitter too. I forgot about Twitter. Twitter and Roku. All over the place. We're everywhere. So be sure to tune in. We'll be back again for another episode. Carolyn, thank you so much always for your time. I really appreciate you spending some time and helping me and educate women and those guys who are listening, because we did have some guys listening today. Educate them about money and how they can use that money to build generations.
Absolutely. Thank you.
Right. You're welcome. All right, guys, we'll be back next Wednesday, 7 o'clock, same time, same place. Until next time, good people, until next time, spend wisely and make it a great evening. Good night.
You've been listening to the Wise Women Invest podcast. Tune in daily at 6 p.m. for a new investment tip to help you make smart money moves. To learn more about Wise Women Invest and to join our community and investment club, go to www.wisewomeninvest.club. To never miss an episode of the podcast, download the Wise Women Invest app from the App Store and be sure to share the show with another wise woman. Again, our website is www.wisewomeninvest.club.